our 360 round. We bring in our panel to talk all about Amazon, which is down about 4% today after the quarterly numbers. The cloud story has been referred to as lumpy. The profit beat may be smaller than some of folks on Wall Street wanted, but you have someone over at one of the analysts saying that there were increased investments in AI, and so not to worry, and some FX headwinds, which all the big companies are facing. Let's see what Arun Sundaram of equity research analyst at CFRA Research and Nick Jones, equity research analyst at Citizens JMP, have to say about this. Arun, I'll start with you. I've seen some targets getting pretty close to 300. Where do you think this could be headed and why?
Yeah, so we upgraded our target price. We went from 251 to 276 now. The shares are down a little bit, but I think this is a good buying opportunity for Amazon. Really the report yesterday, I thought was a lot of positives in there. I think the two negatives in the report one was certainly the Q1 outlook was a little softer than expected. Amazon's typically pretty conservative with their outlook, but this one is a little bit more conservative than normal. But there are tariff headwinds, FX headwinds going on right now. And then the other part is that the CapEx spend. CapEx will likely be above 100 billion in 25. The street was expecting about 85 to 90 billion. So well above expectations there. But then again, all the big tech players have announced pretty big, CapEx increases. So that shouldn't be overly surprising. But yeah, overall, I thought it was an overall strong report. And yeah, we did raise our estimates and our target price.
Okay, so that sounds pretty positive. Nick, what do you say?
Yeah, I agree. We have a market outperform rating. Our price target's 285. We continue to see Amazon as a share gainer across a multitude of categories. They're positioned to gain share in retail, in e-commerce. They're positioned to gain share in advertising, potentially competing increasingly with the likes of Google. And they're the dominant player in cloud. This is a long runway for the company. While they're a massive company, we still view them as kind of a growth company where you need to look out further. So I agree. This looks like a really compelling entry point for shares.
Understood. I mean, are you concerned about the near-term numbers where they are spending on AI initiatives? They also have Project Cooper, which I don't really know that much about. I'd love to hear more about that and just the competitive landscape. Arun?
Yeah. So Project Kuiper, it's their low orbit satellite business. I don't think anyone's really modeling the revenue upside to Project Kuiper or some of these other bets that Amazon's making, even like Alexa, is another example there. But I think right now Amazon's trying to find their next pillar of growth, and that could be their Project Kuiper, it could be Alexa, it could be in pharmacy, it could be in grocery. We're not really modeling that much of those businesses. Right now, it's really their e-commerce business, advertising, AWS that's driving all the growth here. But yeah, I agree that there's a lot of levers right now for Amazon to continue to expand operating profits and operating margins. So yeah, I would agree that there's certainly still a growth company here. And we do expect to see solid free cash flow growth in 25, even though they're stepping up their CapEx spend to over $100 billion.
And even beating Walmart out, at least on one metric. You talked about expansion. AWS expansion is certainly something people are talking about for long-term profits, fulfillment, optimization, higher margin advertising. All of these things, Nick, seem to be going the way of Amazon. So to your point, you have a 285 target. You think this is a buying opportunity today. Impressive to see the Amazon-Walmart battle, right?
Yeah, Walmart's a formidable competitor. One thing they're working through now is Walmart Plus. Amazon always has had Prime, or has had it for a long time, which has helped them really curate for their customers. Walmart, always having low prices, is going to be a little behind the eight ball in terms of really understanding their customers. So Amazon still remains the most convenient option for consumers. You heard them on the call last night. They're trying to get faster. The faster they get, the better conversion they get, the bigger the basket sizes they get. So Amazon's got a big head start, and they have a very robust selection, whereas Walmart's known for kind of low prices. Amazon is too, but you can also buy some more expensive things on Amazon as well. So we expect that competition to persist for a while. And for listeners, well, Amazon's huge. They only represent about 5 or 6% of all retail sales. Right, so there's a long runway for them to continue to attract retail dollars from consumers.
Yeah, understood. I don't really remember there was Amazon Go, Amazon Fresh. I mean, I don't really see a lot of those around. I'm sure they're opening, but I just don't. I live in New York City. But what makes me really also think is the tariffs and what's been going on, closing the loophole for Temu and Shein, and even some of the retailers on Amazon were using that loophole. A final quick thought on that, Arun?
Yeah, no, I think the closing the de minimis loophole is a net positive for Amazon. Regarding tariffs, yeah, tariffs, that's a bad word in retail, but the good thing about tariffs is that it impacts all retailers, not just Amazon. And I think these larger retailers find ways to better navigate through tariffs. They did so back in 2018, 2019 when the first trade war with China was there, and I think they'll do just fine this time around as well.
All right, Nick, final thought.
Yeah, Amazon, tariffs, FX, all these kind of headwinds that are potentially out there. What I'm continuously surprised by is consumers' preference for convenience. So I think while there's a lot of headline noise, people are not fully appreciating how really easy it is to buy things on Amazon and have things delivered to you same day, next day, 2 days. Most folks cannot compete with that. And even if prices were to get a little higher, I think folks will opt for convenience, and that's evidenced in, you see the food delivery folks where people will pay $10 to get something dropped off at their house.
It is. I was trying to send my son some boots for the winter, and the particular site I was on for the boots gave me such a hard time. And finally I went to Amazon and I did it 1, 2, 3 and got, the same boots. Thank you both. Nick Jones, Arun Sundaram. Great to see you both. Thank you very much.